Rajat Rajgarhia, MD and CEO of Institutional Equities at Motilal Oswal Financial Services, joins us on the show. Rajat, so good having you. Thanks much for joining in. Can you tell us a bit about why at this point of time was doing a conference like this with a lot of important mid-sized companies? Why this timing? What do you anticipate would be the outcome?
Hi, good morning. So I think there are three things that explains why this conference is being scheduled right now. First is whenever you have a new tenure of a government that starts, as we are seeing this NDA 2, then you always see things starting with a new mandate. If you go by the BJP manifesto itself, there has been a lot of focus that they have put on the infrastructure buildup that they plan to do over the next 5 years. So we thought at the beginning of this tenure, it is important to get some glimpse of where do different companies stand. The second context is that we have seen investor interest being reasonably good over the last few quarters in many of the capital good related cycle. Now, a large part of the Capex in this system in the last 5 years was driven by the public sector. But at some point of time, this has to be complemented by the private sector. That visibility may be low yet, but we need to keep digging deep to see when does that trend start. And the third important thing is the infrastructure sector also gets impacted by whatever macro concerns of liquidity rates, stress in the system that we keep seeing. So I think this event also allows investors to engage with the companies to figure out how do they stand, what kind of liquidity related events they are seeing. So all in all, I think this becomes a good event for people to get updated on what is happening and to assess what is the outlook forward.
Good morning, Rajat. So while we're talking about infrastructure and the investment cycle, the center stage is going to be the budget 2019 that gets announced on the 5th of July, because a lot is anticipated with regards to infrastructure and the investment cycle pickup from the government standpoint. What is it that you're communicating to clients in terms of what your expectations are and the probability of that actually coming through?
Hi. So we generally do not speak too much about expectations from the budget because we think that this is something which is an activity that has to be done all 365 days a year. The budget increasingly will become more of a event of intent, and I think there are 2 or 3 things that at least people would still want to hear from the budget. First is allocations to some of the specific public capex schemes will need to see some boost, because as I mentioned that private sector is still not into a best state right now to drive the whole capital expenditure plan. So public sector will have to keep doing that. Second, I think 2 specific segments where the focus of this government remains very high. First is housing and second is roads. So what kind of additional SOPs or allocations they make to these 2 spaces will also signify the momentum that we will see after the budget coming from the respective ministries in these 2. I don't think that we would be hearing a lot of big bang announcements relating to infra, because a lot of that has to happen outside the budget. But I think how they manage the fiscal space and how do allocations within the ministries change will be an important milestone to watch for.
You expect, our participants that you would have spoken to early on at the conference, Rajat, are they talking about any special or any expectations from the budget as well? Because that's that one space that has done remarkably well thus far. So therefore it may do well irrespective. So my question largely is that if the budget doesn't dole out anything specifically for the space, is the confidence amongst participants and amongst your team for this space still high? Will people continue to make money in infra and will start making a new money-making cycle in capital goods, even if the budget doesn't dole out anything special?
Well, I think I would agree, because the trend change that we are seeing in the capex and the infra is more to do outside the budget. If you look at the aggregate capacity utilization of corporate India, that has moved to a multi-year high, even though we keep seeing some variance quarter to quarter. And basically in the private sector, we have not added capacities in the last 3 years in most of the spaces. That process has to start. It may it should have happened in 2018, may not be happening in 2019, but should happen sometime in 2020. Second, infrastructure is always something that has to be driven by the government, both central and state. And at least I am very positive that you will see the respective ministries focusing a lot on this, because that is the only way forward to drive up your economic growth. So whether it gets specified in this budget or not, of course, will be an important event. But I think a lot has to happen outside the budget also on a regular basis to maintain a momentum or to drive up the trend in this space.
The other point would be, investment due to elections coming about in the middle of the year was held back. The investment cycle was held back. There was not too much focus on investment. That was anticipated to come in the second half of the year. With the kind of headroom or the fiscal legroom that we have from the budget and for the government, do you think that it's going to be a meaningful contribution which will help spur growth and activity with regards to the investment and then therefore pick up in economic growth?
I think one very important thing has happened in the last 5 months while we all have been looking at investment being held back due to elections. Somehow demand in the system has come down a lot. If you look at many spaces, right from autos to consumption to cement to many other sectors, right, you have suddenly seen in the last 3 months a meaningful slowdown in the demand. So I think at this point of time, a focus has to be to uplift the demand, because the new capacities also that people will look to add in the second half of this year will also be a function of what kind of demand revival you start seeing. For example, if today you are hearing every month some auto company talking about production cut, then for them at the same point to plan about a capacity expansion just becomes that much more difficult, right? The mindset has to move away from production cut to a capacity expansion, and I think that process has seen a deferment of 6 months, and that is why, as I mentioned, that the system will see some deferment, but nevertheless, if not happening in 2019, should happen in 2020.